Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news. A no-change Fed has brought sharp market reactions, bolstered by an odd tariff twist. As expected, the US Central Bank left its key policy rate unchanged at 4.25% for a fifth consecutive meeting. They see the data pointing to a moderation in economic activity during the first half of the year, contrasting with earlier assessments that growth was proceeding at a solid pace. Markets are still digesting the Fed signals, but immediately after, the US dollar rose, although not significantly, and the US Treasury 10-year yield was little changed initially, but then rose, but only slightly. And the S&P 500 rose, but then equally quickly gave up that bump to now be lower. Gold kept falling. Although the US home loan interest rates were unchanged last week, mortgage applications fell, both for refinancing and new purchases. And the June pending home sales report was out today and paints a worrying picture for their housing sector, with sales 2.8% lower from a year ago. 8 of the last 12 months have recorded year-on-year decreases. And the first look at the second quarter 2025 US GDP growth rate is out, showing a 3% rise and better than the expected 2.4% result. But almost all of this is due to rising imports. Consumer spending contributed less than 1%. Investment activity was negative 3% in this result. Public spending and exports both made almost zero contribution. Although 3% is good, it is an unhealthy twist, and it may not last. Of more concern is the dive in investment. In Australia, and led by a fall in services inflation, overall CPI inflation dropped to 2.1% in the second quarter from 2.4% in the two prior periods. That's their lowest figure since the first quarter of 2021 and below forecasts of 2.2%. June inflation alone was only 1.9% above year-ago levels. And today's data removes any awkwardness posed by inflation remaining too high for the RBA, and they're now very much more likely to cut by 25 basis points on August the 12th to 3.6%. On the tariff war front, the US has imposed a 50% tariff on copper imported to the US, but then made a bewildering exception for refined copper. Traders had been stockpiling copper ahead of this decision, but weren't expecting the exception. So there's now far more refined copper in the US than they need at a cost they don't need. It has caused havoc in the copper price market overnight with an immediate 20% drop. The US Treasury 10-year yield is now at 4.37%, up 4 basis points from yesterday. And the price of gold will start today at $3,277 an ounce, down $50 from yesterday, and most of it after the US Fed decision. But American oil prices have risen another $1.50 to be just under $70.50 a barrel, while the international Brent price is now just on $73.50 a barrel. And the Kiwi dollar was at 59.2 US cents and down 30 basis points from yesterday before the Fed decision. Then it fell another 30 basis points to 58.9 US cents. Against the Aussie, we're up 20 basis points at 91.6 Australian cents. Against the euro, we're unchanged at 51.6 euro cents. That all means our trade-weighted index starts today at just on 67.2 and down another 30 basis points from yesterday. You can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.